right, welcome back to the Quintessential Real Estate Podcast. I'm your host, Quinn. In today's episode, we are going to be talking about mortgage rates and the market, and brought on the tall lender, Sean Bogue, to kind of help along this conversation. So thanks for coming on, Sean.
What's up, everybody? I'm back.
Yes, he is after 2 years. A lot is changing. People think we're going into a recession, and I thought the first interesting thing to talk about would be this graph that is going around on social media. And my boy, Patrick Beck-David, even succumbed to the, I guess, the meme of it. And I'll hold this up here. So saying basically, we're in trouble. Brace for impact. 6.1 million Americans are behind on their mortgage. That's the highest in 20 plus years. What do you think of that, Sean?
Yes, I've seen this float around the internet the last couple of days, and it's just, and this is your boy too, PPD.
I know.
Man.
But here's the thing: it's like this is the problem with when you're just getting your information from social media. This is where the problem lies, because what is this data? This data is from FHA products in multifamily. Right. That's not the actual health of the real estate market. That is multifamily homes who are in some delinquency on their mortgage. I mean, that's completely different from just the regular real estate market.
Right. So this is showing, I guess, so that the FHA multifamily delinquency rates are at where they were, or if not higher than they were at like 2008, which is definitely concerning. If you're just looking at that.
Yeah,
and
absolutely.
And we know multifamily is going to be mostly investments. Even if you're living there, you're renting out other units in the property. So they're definitely riskier, right? And it is concerning that this is happening. But when we do look at single family, it is lower than, it's all-time lows as far as delinquency rates. So I think you have to look at everything, not just one simple chart. It's going to tell you what the market's dictating.
Yeah.
But it's definitely an interesting thing. But yeah, just to put this chart out and say brace for impact is a little it's tough.
And also it's just there's, especially in our market, like real estate is local. It's not just the national thing, but I mean, this is just pure emotion. That's like, brace for impact, that there's going to be the issues. And it's like, well, I can't really name anybody who is having this type of issue right now in, just the residential market, or even like rents around here are good. I'm not hearing a lot of people who aren't, vacancy rates are not high at this point. So another thing I want to kind of go through is there's some big news on your side of the industry. So Rocket Mortgage has been on, actually it's on my side too. Rocket Mortgage has been on a tear to basically be the big top dog, jump Zillow. And what do you think about it from your side of the industry?
Yeah, so this is another topic that's been coming up in the last couple of weeks in the real estate industry, and Zillow just bought up Mr. Cooper yesterday.
Who's Mr. Cooper?
So they're another mortgage servicing company. They do a lot of mortgage servicing, so who you're paying your mortgage to every single month. And they bought up a lot, like 9 million customers with the purchase of Mr. Cooper. So they're doing a lot to acquire more customers right now, and they're doing that through buying Mr. Cooper, through buying some of these real estate companies that for leads. So they want to generate more leads internally. They want more retaining customers, so for refinancing and stuff like that. And then, they've been buying up companies for years. So they bought like Follow Up Boss. So they're buying up a lot of these little companies too, and then bring them all into one big company. And then the goal I've heard is that they want to be a one-stop shop. You go there. It's always been click a button, get a mortgage. That's been their slogan. And then they'll have every step of the way lined up for you, whether that's mortgage servicing, the real estate agent buying or selling, and then the title company, homeowners insurance, you name it, whatever's in the process, they're going to have it all bundled up for you in a one-stop shop. So I think that's awesome, and that's really cool. I think it's definitely more tech savvy or
I mean, this is a big
easier
company,
for
so
some
they
people.
have a lot the highest, the best type of technology to make this the easiest way possible. I thought it was pretty crazy. It's like they bought a company's that market share was just in the dumps in Redfin in February for 1.75 billion. I think it was like $6 or $7 more a share than what it was worth. And it's like then they go ahead and buy, Mr. Cooper. I saw it's like one in 6 mortgages in the U.S. are going to be covered by Rocket. I mean, as a mortgage broker, when you hear that type of stuff, what type of opportunity, what type of like cons are there that comes along this from your side?
So I don't want to talk bad about anybody or any companies.
We're not asking you to talk
Yeah.
bad. I'm just give me your idea of how it's good, bad, it's competition.
So I'd say the good part is they are trying to bundle all these services and make it easier for people in the industry. And I think there are customers out there that just want these simple, do it all for me. I don't want to have to go out and, I don't know title companies, I don't know homeowners insurance companies, mortgage companies, all this stuff.
Mm-hmm.
And just make it easy. Just bundle it all together, do it all for me, and make this process simple.
Mm-hmm.
And that's cool. And I think people are out there that want to do that, and they don't want to talk to anybody, or they want a different level of service, and they'll get that with that. And I think it's interesting, and it's been brewing in our industry for a while. Yes. But that's only going to be for a certain client. And as we know, real estate's more complicated than just a one-stop shop, and everything's so easy and simple. Mm-hmm. It's more intricate than that. And I think AI and technology is definitely helping with that. But as far as cons wise, not everyone's going to want that, easy one-click button, or they want a little bit more hand-holding or guidance throughout the process, because it's not simple. And you're talking about a huge purchase, whether it's short-term or long-term goals, and then being able to meet those expectations, go through the process, know what's going on. There's a lot that comes up. Even some of the easier deals that we've had, or we thought were going to be easier, ended up being a lot harder than expected, because the industry, stuff happens.
Yeah.
Whether we can control it or not, and people's lives are changing at all times.
Yeah. The idea of it being vertically integrated and one-stop shop may seem like a good idea. One thing that I would push back on is when you hire somebody to do one specific item versus hiring a company to do everything, you are the quality isn't necessarily always going to be the same with, hey, here's your realtor, here's our title service, here's our mortgage person. If you're not vetting every single one of those people, rather than just saying, hey, I'm vetting this big company, I think that sometimes the ball could drop in some cases. So like the way I do real estate is, hey, you hire me, and then we get you hooked up with some local lenders who, will get you rates, get you problem solving. And hey, here's a title company who will, run the report and then do the closing for you. And while that's not a one-stop shop, you got to look at it as this is a group of people who know how to work with one another. They may not be syndicated or owned by the same person, but they can do a job effectively. And I think like as long as you have a point man, whether it's a mortgage person or a title person or a realtor, you could still have a really good transaction, not by going with one of these big ones. And I think you're right. I think some people are like, hey, let's go with the big dog and work through with them. But if you're working with the people who have the expertise, it really doesn't matter what outfit that they are in.
Yeah, well said.
Yeah.
I think also when you're looking at the process, once you start bundling services, you don't know how much things cost. And you're not going to actually see what the numbers are. And they're kind of going to be black and white, because they're kind of choosing the certain service for you. Mm-hmm. So, when you bundle, sometimes you save money, but other times you don't really know what you're paying for, so you might actually be paying more too. So it's not for everybody. Yeah. I think it has its people, and those people are going to continue. If you want that kind of service, that easy push a button, get a mortgage, you're going to continue doing that. If you'd rather have more of maybe a local expertise, maybe somebody that's going to hold your hand a little bit more, walk you through things, and be an advocate for you and your goals, whether they're long-term, short-term, be able to match that all up for you and be with you, from day one to, year 30, if you're staying in the home, that long, or maybe multiple homes, and help you throughout that situation. I think it's it's just a different way of doing business, and everyone has their own way of how they want to deal with people. Some people don't even want to talk on the phone.
No, you're definitely right. Now, we had talked about this off air, but I think that this kind of goes along with kind of the big box mortgage, where you had a client that you ended up winning the business midway through their deal, where they didn't know what transfer tax was in this state or something along those lines. Talk about that situation, because we're trying to give examples of, hey, what are the differences here?
Sure. And I will say this, like, real estate is hyper local, whether that's the market itself, the people in that market that know the market. And if you're doing business in different states or different areas, things are just going to be different. Like, the way closing costs are done or the way business is done is just different. So when we go to different markets, I started doing mortgages in New York, which is an attorney state. Now I do a lot of mortgages in Pennsylvania, which there are no attorneys. So that factor alone is just extremely different. So if you're doing business nationally and you're doing businesses in different states that have all different rules and regulations and closing costs and certain taxes, everyone does everything a little bit different. So in certain situations where you have more of a national lender, we had somebody, a realtor had referred me, that they had got under contract with a property, and they had gone over, I guess, certain basics of, I always go over cash to close and your monthly payment. That's the two biggest things you need to know beforehand: how much money you need, closing costs and down payment, and then how much money it's going to be monthly, because those are the two most important numbers. So at minimum, you should be going over that. So if things change throughout that process, and especially once you sign contracts, that's a problem. So this person didn't know about certain transfer taxes in Pennsylvania, which is different from other places. So they didn't account for that. And they even accounted more when they put the estimate on there, because they didn't know. And that person realized, hey, I don't have that amount of money. So I don't have enough money. I'm under contract to purchase the house. I don't have enough money that you're telling me I need. And then the monthly payment was higher than they had expected. So they could qualify, but they weren't really too comfortable with that. So I had to jump in there, give them an actual number of how much it's going to take them cash to close. This is how much money we need. And then this is realistic what your payment's going to be. And even gave them a couple different options, because they had options to go there. And they ended up pulling out of the contract. They were able to get out of it, which was very lucky. And now we're just starting over from scratch. I still have that client.
Oh, okay. All right. Yeah, that's great. Yeah, it's like, if you don't have all the information, you can't make an informed decision. And luckily, they were able to get out of that contract. I mean, it's not always the case where you get that, deposit back. It has to fall under, a certain contingency, or, the grace of the seller saying, hey, this person made a mistake, even though it's going to cost me, we're going to give this back to you. It doesn't always happen. But
they got lucky.
Yeah, absolutely. So let's kind of talk about, I guess, we're sort of talking about a possible recession, right? So wanted to talk a little bit more about that. I know you had some things that you wanted to go through here.
Yeah, so I think a lot of talk right now with the markets and what's happening in the stock market and tariffs and all this stuff. There's people starting to say the R word now, which is recession. And is that coming, and is that looming, and how is that going to affect real estate? Because if you would think in a recession, home prices are going to be coming down and it's going to affect the real estate market. But I think in the Northeast here, especially in our market in Pennsylvania, it's a very hard market. There's extremely low inventory right now. And in recessions, if we look in the past, they lead to a couple different things, possibly lower rates, which just are going to bring more people into the market. So it's going to lower their monthly payments. So they're going to be able to afford more. So more people are going to be getting into the market already, which we have such low inventory to begin with. Hopefully maybe that brings a couple more sellers into the play, but it goes hand in hand. So that gives them more buying power with those lower rates, and hopefully there's less competition. So unfortunately, some people might be losing their jobs, or they might lose money in the stock market that they were going to put towards the house. So that might even bring less people out of the market, or maybe they don't want to sell. Times are too crazy. They want to stay put. They're comfortable with their 2% mortgage, and they were going to take that leap to buy the bigger house, but now they're not because things are changing financially. So there's a lot of different ways to go about it. But as we've seen, 4 out of the last 6 recessions, home prices have actually gone up.
Really?
Yep. And one of those were 2008, which literally started in the real estate industry, which we're not seeing any of those indicators right now. And then the other one was like 1% drop the following year, which is nothing really.
Okay. All right. Let's see.
So if anything, I'd say we'd probably have more stability. And we know that in order for something to really change right now, we need to have more supply of homes. Mm-hmm. So people need to sell.
Yeah. Yeah, I think that's always, from our housing recession would just need to be a huge influx of homes in our market, at least. I mean, there are other markets where they're experiencing similar things like that nature, but we have 1 month of inventory basically or less in this greater Philadelphia area. And I think in Philly, it might be 6 months. That's a big county though. So there's a lot of inventory there to kind of skew those numbers. But,
and if we're talking about Florida or Texas, which I think represent about 20 or 25% of the supply of homes in the whole United States right now, inventory wise, which is crazy. You might be talking about a completely different market and mindset and way to go about doing business.
Yeah.
I mean, we're just not in those markets right now, so we can't really speak about them. But
and those have some interesting variables attached to it as well. I mean, Florida being so volatile with hurricanes, people who weren't previously there, but they moved during COVID, and now they're deciding oh shoot, maybe I should not live here. You've got insurance costs going up. You've got the Palisade fires. You've got all the flooding in North Carolina. You've got everything that always happens down in Florida. I mean, all these people moved. There was a lot that happened in COVID that moved people around. So now we're just kind of seeing those markets just kind of acclimate. Hey, who's really staying here type deal. And I mean, the insurance cost is a really, really interesting one. Everybody's seeing some type of increase, and there's probably more increases coming this year because everything is getting adjusted. I mean, you have insurance companies literally leaving California because they're you're not doing enough from a policy standpoint to make this worth it for us. We're just going to be paying out.
Yeah, climate change is real, right?
Yeah.
It's not, and it's probably not going away as we've seen. So insurance costs are really going up. I mean, even we see it even here in Pennsylvania. My homeowners insurance has doubled in the past year. They said my roof is 20-something years old, and we're a higher risk. And I think I don't know if you remember this, but our insurance actually went down during COVID. Do you remember that?
No.
So insurance was actually going down during COVID, which is crazy. And now they're almost making up for that. Mm-hmm. And then plus the cost of materials. So if something did happen, everything costs more now.
Yeah, everything costs more. Sense. And everything is basically, your insurance provider is basically saying, okay, we're going to insure your property for the cost of it to rebuild it in a lot of ways. So that if everything is going up like lumber or any other raw materials, obviously your insurance needs to be adjusted. So that's why people are seeing that.
And your home value has gone up now too.
Yes.
So your house is actually worth more as well. So
and you want to have good coverage. That's another thing that I think people don't talk about is are you underinsured? Even though you don't want to pay a little extra, it's are you actually underinsured? When you got that policy for that $400,000 property, if it's now worth $600 and you're only insured up to $400, there's a big gap there if something were to happen to that property.
Yeah, you need to speak with your insurance person, make sure you got the right coverages for sure. Do you want to talk about newsletter and
let's talk about the newsletter.
Yeah, so every week I put out a newsletter. It's the Thursday market update, and it's something that I take a lot of pride in, and I rate myself. And it's just certain scenarios that I see coming in the market, certain things people are talking about, whatever's the hot topic that's on, with the market. I usually give my opinion on maybe some facts, statistics, graphs, some pictures, things like that. I talk about some deals that I have going on right now, situations, so you can kind of put yourself in those people's shoes and see, hey, how are they getting things done, or how are they doing certain things? How are they winning in this market? Because people are curious. And then I do give some certain, if stuff comes up, like scenario wise or new tech wise, something change in the market, I'm definitely going to let you know about that as well. So it's a really good informational tool. My clients really love it. And we've definitely had some hot topics over the past couple months here, whether it's stuff that's come up with my clients that I've seen, ways to win in because we're in the spring market now. Think different things I'm seeing people do that are helping them win properties. And then other topics, just like the market itself, the economy, rates, whatever it may be, whatever's the hot topic we're talking about. But if this is something that you might be interested in, you're like, this is something I want, just DM me on Instagram at the Tall Lender News, and I'll add you to that list, and you'll get the market update every Thursday morning, 6 a.m.
Yeah. And do you have another one that goes out to just your like realtors or?
Yeah. So then Monday, I use similar information and then tailor it towards my realtor partners. Mm-hmm. And then we send that out every Monday. So that's Mortgage Mondays with the Tall Lender. I call that one.
Yeah. No, I reference it because I get it every Monday. And, it's one of the few newsletters that I decide to read. And I do find it valuable. It's like we're not selling anybody. It's just what is going on, and usually it is helpful and it's interesting. I like to read to say I really like and appreciate the part where you talk about what your current deals are, because we're not always doing deals together, but I can see, hey, what is working for Sean and his other realtors that he's assisting. And in this market, it's like you got to figure out what it takes to get homes under contract, whether you're a listing agent or you're a buyer's agent. It's like you got to learn how to do it, and the more people that you're collaborating with, the better. So it's a great tool. And I know for your buyers, it's definitely a good thing. Or sellers, just getting this information. Then they can make a decision like, hey, is it time to refinance?
Yeah, no, that's a big topic that's been coming up as far as refinancing, when to refinance. Everyone wants to save a couple dollars.
Are we there yet?
We're probably not there yet. I mean, there are people that are in the mid to high 7%. Yeah. I mean, they are out there, so it is possible. Even if you're in the low 7%, it's possible to save money. But it really depends on your situation and what your goals are, short term, long term, how much it's actually going to cost you. And what I've found is some of the lenders can make it seem better than it is, and you have to really do the math of where's your break-even point. You take the savings and you divide it by how much it's going to cost you. It's going to tell you exactly how long it's going to take to recoup your money. And then you can make that determination, hey, is this worth it for me? Or are we going to wait till it goes down longer, and we can find those spots of when it makes sense for you, and then we can tailor it towards you. But I'd say when it comes time to refinance, sometimes it's very quick. A lot of the markets right now is very up and down, and down. So when it hits those certain spots, it's only at that spot for a very short period of time. We saw this last year at one point where rates actually hit in the 5%, the high 5%, or low 6s for some people, for a couple of days. And we were able to refi a couple different people, and a bunch of people said, well, a lot of people that were going to be able to save money in a very short period of time. I'm talking within a year and a half to at least recoup their funds. Said, I'm going to wait until rates go down even lower. Yeah. And it's hard. Everyone's situation is different, and obviously they'll make that determination. But we did have some people refinance, and they're over the moon, and they're seeing where rates are again now, and they're like, that is great. You can always refinance again, and not that we're going to refinance you a million times, but it has to make sense. And
I think that it kind of calls back to this newsletter here. and the importance of working with just partnering with someone in your real estate journey where, hey, is there an opportunity? Because we have this market, right, that goes like this with mortgage rates right now. And I don't know when that's going to stop. I mean, it's been volatile for the last 3 years, basically. And if you're telling me that there are days where it makes sense in 12 months where you could do a refinance, but if you don't have your ducks in a row, you're easily just going to go, this is just overwhelming. I can't do all this in 6 hours. I can't get you the stuff you need, Sean. I know it's going to save me money, but we'll wait for the next one. And then, 6 months goes by, same situation happens again. You get the touch and you're like, all right, let's refinance. And then it's going to be the same thing again. So if you are really in tune or just have someone who is in tune with you and knows your goals, then that's really valuable because there is no way to we can't predict this market. We can't say hey, we're steadily moving downward. And if I knew we were steadily moving downward, then I'm never going to want to refinance. Then I'm just going to wait.
Wish it was that easy.
I'm just going to wait. Yeah. So it's not that easy.
Yeah, you got to take it when you can, and you got to make a decision, and pretty quickly.
Mm-hmm.
But the good thing is it's all laid out for you. And with my clients, we're hitting the end of the quarter right now, which we're actually in the second quarter of the year. So every quarter, all my past clients, I do what I call the refinance guide. And I just update it for you, give you a couple of different scenarios, tell you where you are at now, talk to you, see where your goals are, what's changed in your life, whether you've added on more debts or you want to maybe purchase a bigger home in the next couple of years or downsize up, whatever it is. Or you have a target interest rate where you're like, hey, I want it to be at this. And then that's really when I want to refinance. At least I know and I can make a note of it. Yeah. And then when it hits that point, I can give you a call right away. And then we can lock it in and move forward right then and there. Because you're right. If you're not prepared, and we don't know this, if rates really do come down, let's say they come down very quickly, everyone that's prepared and ready to go is going to get somewhat of a first crack at it just because
that's how it works.
That's how it works. And they're ready to go. I know they're serious. And we already have everything ready to go for them, a whole plan out. So when, it will be easier for them. So I'd say just prepare, figure out somebody that you're comfortable with, have a communication with them, a relationship, because it's really a relationship, and have that goal of hey, this is what we want to do. And whether that's going over certain numbers to determine that, and then being able to have that strike when, when the time's hot and it comes up. Because some people, like you said earlier, they're like, oh, you get a little greedy. You're like, oh, well, we'd love to save a little bit more. And then boom, next thing you know, rates shoot up again. And that opportunity is basically lost.
Let's go back to your newsletter here. And I just actually did a podcast on this just from a realtor's perspective. But what is working right now? What are you seeing for your clients that are having success? And how are you assisting them?
Yeah, so in these hard markets, you're going to have a lot of competition when it comes to winning a home and getting your offer accepted. And I think a lot of people just look at it as the price. If I offer more, then they'll accept my offer because I offered the highest.
Yeah.
And as you know,
it's not the case.
It's so much more than that. It's really in the details and how you go about making that offer, what the timing of the market, the offer, and how it's all done is really the most important thing. And I in my newsletter I had sent out right when the spring market was beginning, right after the Super Bowl, is usually the indicator of when that's going to start. I put out my top 10 tips of what's working in this market, and how I see people doing even little things to just be able to maybe get an extra look or being able to just get that offer accepted, because some of these offers are everything's the same.
Yeah.
You just got to make sure you're a little bit different. And every seller has their own goals of what they need to do. Maybe you have to figure out what obviously can't ask them, but figure out what they want and then be able to deliver that specific item to satisfy them. And that might not even be price.
Yeah. I think too, there's a lot of intangibles too that are really hard to quantify that will win out in a lot of these situations. So other than price, like what have you seen? Like give me a specific thing that had happened in one of your past transactions where this worked.
Yeah. So I would say the number one thing, and people think this is probably very simple, but I think it's the most effective thing. And I think this all starts with like preparation and who you're working with, and then the mindset of when you're going into some of these houses. And sometimes it takes losing a couple to understand it. But being the first one in the house and having the first offer in the seller's hands, I think changes everything. It puts you in the driver's seat, and you can follow up, and they always have you as the first offer. They have you in mind, and then they start getting more offers. At least you can come back and say, hey, we're the first one in there. What can you do? Where are we? How can we make this work? Because you have that leverage. Whereas if you're just coming in last, the fifth offer, and you're barely even close to everyone else, you really have no leverage at that point to come back and say, hey, how can we make this work? They're like, you don't even understand where we're at right now, so you're so far behind. I think just getting in there first and building the rapport with the other agent or the seller and working that, I think is just so important. People just don't think about it.
No, they don't, because also this is my number one pitch to all the people whenever I'm taking clients out to buy homes. It's like I tell them, if we like the house, we're pointing, we're shooting, and then we're going to get the ball rolling. And I can start making my inroads with that seller agent so we can figure it out. But yes, at the end of it, if there's like an offer deadline, you do not want to be the agent who is submitting an offer at 3 o'clock when deadline is 5 o'clock. So they're already talking. And another thing too, that first offer in by the seller is going to be like this. Oh, all right. I was right. My agent was right on price. Like we at least have one offer, because even if the home is perfect, like you still don't know. The market is going to tell you what your home is worth. So until that first offer comes in, so there's an emotional connection with that first offer.
Yeah.
And, it matters more in some cases, like a cash offer comes through and takes it all at the end, but it is what it is. But I really like that point. Like it can definitely be the intangibles that have nothing to do with cost, and then if you're a buyer, you get that offer in, and then, like you said, it's like they feel like they owe you at the end to come back and say, Sean, your guys you're very close. Is there anything more they want to do? Or are they going to stay where they're at? We know it's a really good offer, but this one has X, Y, Z, or if they tell you, or if they say, hey, they're just a little bit better in this area. And the best thing too, from your perspective, is you can kind of go back and say, hey, these are our options now. You can pick and choose. We can stay where we are. And then they feel then the consumer is in control of their situation. There is not as much control if you go on a Sunday open house, call your agent and say, I want to put an offer in. The offers are due in 3 hours. Not much control. Basically, it's just like throw it out to the wind and hopefully they catch it type deal.
Yeah, preparation is key. And when you're getting in there quickly, you can put the pressure on them too. If you make a really solid offer, I'm not even talking coming in just at listing price. You make an offer that they almost can't deny. Maybe they do accept it right away too, or they give you that the leverage or whatever it is. But you're putting the pressure back on their plate, especially I've seen a lot of people just pull the house right off the market. It's such a good offer. It's almost there's no point of waiting because they might lose the buyer too.
Yeah, absolutely.
It goes both ways.
I mean, and you don't know the seller, you don't know their circumstance. If maybe they don't want to go a whole entire weekend where showings start Thursday, and then they say, hey, there's an offer deadline for Monday night. Maybe they do not want to be out of their house that entire time. So they get exactly what they want Thursday night, make a decision Friday, and then they're like, we're good. We're satisfied with this offer. So that truly is valuable. What else you got?
Yeah, so, I mean, if you're going to do anything, that's the number one thing.
Yeah.
And the rest of this, I feel like it will help too, but that's so important. And then something else to keep in mind is a lot of buyers I see winning in this market. Obviously, there's some really, really, really hot markets where it is just, we're seeing unbelievable stuff where people are just waiving everything and they're going still crazy over asking. But then there's the outer market. So as you get further and further away from those hot markets, it gets easier in those markets. And there's people that need concessions still that we're still getting. They're getting the price at either asking or below. That's still happening. And there's people that can't compete in these crazy situations. And you got to realize that, okay, maybe in order to get a house that's reasonable where I can get some sort of concessions and be able to negotiate, I have to look at properties that have been on the market at least 30 days and look at those properties. Maybe they're overpriced. They're always one of two things, or if both. They're overpriced or they're really, really old and they need some work. So, and if you get both, that's like the golden ticket. So when you see those properties come up, then you can really negotiate. You can get these assists. So you can get money towards closing costs. You can get a lower price, whatever it may be, and then maybe use extra. Maybe we'll put less down. We'll save some money with the assist. You can use those funds to upgrade the house on your own. And you'll have those funds available, and it'll be cheaper because you're not going crazy over asking. But for people that are really struggling, that's like a house hack right now that I'm seeing, where the realtors are, hey, we're going to target these type homes because we know we have some leverage on it. So just wanted to throw that out there too. But other items that are working when you're making, just small stuff like just timing. Like I feel like this, asking like, hey, what's the seller? Or they have to be out like very quickly. Maybe they have to sell their house. So they want, rent back, or, it's going to take 90 days, 120 days. They want to be in there, or they're, I've had this recently. We've had a deal where the seller was getting new construction, where it's like there's a cash offer on there probably that we were competing against. Maybe they needed to close quicker, where we were like, hey, take it, 120 days, whatever you need, let us know. I understand that you're building a house and we're very flexible. I mean, that's huge for them in that situation. And that might have been really what they wanted. They didn't really care. Obviously there's a price point to it, but that might have been more important. So just flexibility.
I mean, if you're buying, in a lot of circumstances, these are going to be younger people. Younger meaning, not retirement age in a lot of ways. And people moving out of these high value areas have lived there for a long period of time. So that transition is going to be hard in general, just because of coordinating. We haven't moved in years type of deal. And if you could take complexity out of your offer and just say, this is really simple. I understand you're going to settle on the 10th. We will settle on this house on the 10th as well. And, we'll, do everything to make this as seamless as possible with, our offer in mind being competitive with other ones, but just saying we will be flexible. I mean, like hey, there's a switching cost for me if I'm renting and I'm breaking a lease a month or two ahead of time. So I have to then, pay on the lease because I had to move in early. So our offer would get accepted. I always tell people there's always going to be a switching cost, but that will sometimes be enough to get you into that home because they're not the ones experiencing that switching cost the way you are.
Yeah. So that's definitely one. Another one is just, talking about like more of the relationships of the actual people that you're working with. So I think all these, and by the way, all this stuff is super basic and it sounds easy.
I know it all sounds so simple when we're talking about it. Like we want to give them like these keys to it, but it is simple.
It's simple, but it's like everything else. Most people just don't do the basics. And that's probably the root of the problem, but it's just working with these people. So like on the lender end, being able to call the listing agent and just building a rapport with them on the lending side. And because what they're getting is just a piece of paper saying that you're approved for a certain amount of things. They have they don't know who you are. They don't know who these people are. All they're just getting is a piece of paper saying you're approved, but actually being able to speak with them and building that relationship and the trust and like, hey, this is a true pre-approval. We've collected all the documentation. We've ran it through our underwriting systems. I've seen all the bank statements, the income. This is a home run deal. No worries here. And just backing up the offer itself and the listing agent, everyone being on the same page, it just shows that you're competent and you know what's going on, and this is important, and these people aren't playing around. And then I think the flip side, I think the same goes on the realtor. So I think, Quinn, this is a testament to you. You know, one of the last deals that we did, the way you presented the offer, the things that you spoke about, the way you followed up. I mean, it sounds super basic, but most people just don't do it. And that, I think the listing agent, when they called me, when I spoke with them, they were impressed how prepared the offer was, what you said, what you did. And it clearly was embedded in the real estate agent when I spoke with them too. So it speaks volumes just on the relationship. So choosing who you work with, how they work. It's not just submitting the offer. You could be the best offer just because you put it out there. You don't follow up. You don't know what's going on. You don't know what's happening. You're not able to pivot and help, do some of these other stuff you're talking about too, build that relationship, because it's really a relationship business at the end of the day. We're just talking with people, making things work. And if you're not communicating and doing basics, which a lot of people just do not do, I know that for a fact. I've seen it on the lending end. You're gonna lose.
Yeah.
Or you're just not gonna have an upper hand.
Yeah.
People that are doing this stuff will have that upper hand, and even if they're not the best offer, they might have a chance to come and win the business, or maybe they just go with the less of an offer. But once again, what is it? Just price? I mean, that's just one aspect that we're going over.
Yeah. Yeah. The agent component is so hard because if you don't interview your agent or get a good sense of who they are, like you don't know how they interact with other agents. You just assume. And it cracks me up when, I love the words that you just said about, it's like, I think I do a pretty decent job with my offer submission, my follow-up and whatnot, but I'm on listing sides too. And I will get these basically they just scan me the offer. They don't put anything in there. They don't call me. And I'm like, all right, I'm going to go through this and I'm going to make sure I'm going to vet this. But it's a reflection on, hey, this is how this transaction is going to go. It's going to be a lot of like pulling information out. And, there'll be times too where I was in a multiple offer situation on the list side and I was talking to both agents and we were right at the finish line. And I told the one agent, I was like, okay, we need to do this. And call your seller, see if we can do that. I called the other agent and said, hey, we're about to wrap up. And I gave him a couple things and he's like, all right, I'll call you back. And then my seller, we heard back from the one and I was like, okay, I still haven't heard back from the other person. He's like, all right, let's wait a little bit, see what they say. And then another hour goes by. I gave him a call. He didn't call me back. And we're talking about a high price point here. And then I was like, okay, like we didn't hear from him. Like, let's take this offer. It's a really good one. So we took it. And then around 10:30, I get a text message like, hey, sorry, like I was, busy. I'll send over the update. I'm like, dude, you lost it. I don't know what to tell you. Like, I cannot handhold you as an agent to an agent. Like, I'm doing, the best for my seller. But if you're not going to be helping, it's like that is a reflection on how this transaction is going to be. And I want this to close. Like, at the end of the day, too, they can put a big price on it. But if they don't have the tools to close this, it's not worth like pulling our asset off of the market to take a chance on someone who is not prepared.
Yeah, and just because you're a cash offer or whatever doesn't mean you're not you want to get a deal. Some people are looking.
Oh, that's
for
true. Sure.
Leveraging that for a deal,
Which you can can get deals with cash. Cash is king, but it's not the end all be all.
Yeah, and we beat out cash offers and that have been closed too. It's just once again it comes down to that relationship building and how it's all presented, And there's other ways. I've a bunch of other ways that we can go over. Some of them are very simple. Some of them are easy. Let's say on the financial end, like putting more money down on earnest deposit. Some people, they only put $5,000 down on earnest deposit. Yeah. That's kind of nothing, right? That's not really that much skin in the game.
I'm definitely seeing that becoming a trend. Like agents are coming back to me and saying, hey, I see they've got 10. Would they do 20? And it's like, I'm sure they will. Let me go see and check. But in a lot of ways, it's really interesting because, we had talked about this, like some new homes are coming on and they feel like they're missing out. So they'll back out of one deal. If you're buying a $500,000 house, you probably have $5,000 to walk away from. Like, not saying $5,000 isn't a lot of money, but in those cases, it's like, but if I can get the home I really want, seller be damned, I'm walking and
Yeah.
I'm going to go put an offer in on this home. I mean, it's not the right thing to do, but people act in their own interest.
Yeah. So that's one thing.
Got to keep them there.
Yeah. In New York, I feel like people were putting, maybe because of the attorneys, they were putting down a lot more. You know, you'd see 5, like maybe 10% being the standard. Obviously, it depends on what they're putting down actually on the mortgage itself, but higher amounts, I would say. So that might just be the area. But I've seen trends where they're coming down, and it shows your commitment, how much you're in on it, how much money you actually do have available quickly. So I think that's a big number right there. And then like escalation clauses. So I've seen a lot of people do like even as low as $1,000 or $2,000 escalations, meaning you make an offer and you'll go up to a certain offer if other offers are there, and then you'll go up certain thresholds, maybe 1,000 or 2,000, maybe actually making it a large threshold.
I agree.
You know, going up 10,000
Yeah.
each time instead of
because
2,000.
then it's significant. It's not just like, oh, they went $1,000 over. It's the same exact offer. It's like, no, they went over 10. And then it's like, now we're talking about, hey, this pays for basically my agent or something like that. If we can get this, to the end.
No, seriously. And then the other big one, so, as we're talking about going over asking or people just listing it higher to begin with, is the appraisal comes in as a factor. So, if the appraisal if the house isn't worth what you're paying for it, as far as the bank's eyes and the appraiser's eyes, then we might have issues on the lending part. So there's appraisal gap coverage. So in the negotiations, this is another leverage tool that you can use. And most people, I think most agents don't even really understand how you're able to use the appraisal gap and what that considers, because you can also do you can do it with mortgage insurance depending on what you put down, and then you can also do it with cash out of pocket, or you can mix and mingle both. So it's a really big strategy. I think a lot of people miss it because some of these things are basically irrelevant if you ask the right questions to the borrowers. I don't think if you're like, hey, we're putting 10% down. Do you care what the appraisal comes in at? No, they don't care because they know the house they're paying, it's worth what they're paying. So they're like, well, if it comes in, if you put a 5% gap, meaning if it comes down 5% of what you're actually purchasing it for, and you put that gap and you're going to cover that difference either out of pocket with mortgage insurance, are you cool with that? And they're like, okay, what's the repercussions? Well, you got to come out with 5% out of pocket. That's one option. Or we just say you're putting 5% down instead of 10% down, and your mortgage insurance is going to reflect it as the 5% instead of 10%. Most people are like, well, what's the difference of that month? They have really good credit. It might be $20, $30, $50. And then they're like, okay, that's not really a big deal at all. Let's go with that route and waive the coverages. That just bumped up your offer and made it look so much more enticing now that we're going over. And then so that's one way. And then the other way is, okay, well, we're worried about the appraisal gap and going too much over, and the sellers a little bit, they may not understand it. The clients might not understand it. So it's like, okay, let's take that out of the picture. Let's just pay for, so in Pennsylvania, you pay 1% local transfer tax and 1% state transfer tax, and you split it between the seller and the buyer. So you each pay 0.5% on each. So what you could do is say, hey, we'll pay for the seller's 0.5%, either on both or maybe just one of them. And use that as well. So it's increasing you're paying more, but it's in a different way. It won't affect the appraisal or how much the house is worth because you're paying it basically on the side. Instead really on
just part of their closing costs rather than their, what the home is worth. Yeah, I think that's very, very good.
So those are on the financial side are big things that we need. I feel like aren't discussed as much either, especially the appraisal gap. It's just like, especially with first-time home buyers, I work with a lot of them. I don't know if it's the agents are not comfortable or
speak for yourself there, because this is a conversation we always have.
Yeah. Or maybe I'm not looped into that conversation.
That could be it. That could be it. What I do is I try to lay it out. Hey, this is an appraisal gap. And then I go, all right, let's have Sean explain it now. What's that cost going to look like? Because most buyers, especially first-time buyers, do not have the liquidity to say, hey, I'll come up with a $10,000 appraisal gap. Let's have Sean bake that back into your monthly payment. And like you said, $20, $30, I mean, to get the home, That's totally worth it. But yeah, no. And another thing you could do too, if we're talking about other ways, is, some agents are paid by the buyer. So that's another cost that they do not have to experience as a seller if they come to terms with their buyer. Yeah. So, well, that's really all. I think. We're just about an hour here, so I think it's good that we wrap up. But Sean, it's always a good time talking with you about mortgages and real estate. Once again, just kind of let us know where we can reach you, and we'll let go.
Damn, I can't believe we hit an hour already.
I know.
It's like box in here. We're in the studio. Time just flies. But yeah, thanks for having me on. Appreciate talking with this stuff with you. This is what I live for, But if you want to reach me, everything Instagram @thetall_lender. Just give me a follow. Shoot me a DM. If you want to hop on that newsletter every week, just DM me news. We'll add you to that. Or if you're really curious about that refinancing and you want to be on that refinance watch list for me, so if we can discuss where you're at now, what you want to do. I can put you on that watch list. I could add you to that and what rate you're looking for. So DM me refi if you want to get on that, and we'll make it happen.
Awesome. Thanks, Sean.
Dude, awesome. Thanks, brother.